Welcome back to the Longacres Finance channel. Just when we saw a glimmer of hope, with the S&P posting a low but positive return in May, the index is getting beaten down in June again. SPY, the popular S&P 500 ETF, is down 7.82% through June 28th, and very close to a year-to-date loss of nearly 20%. Typically, Dividend Aristocrats have been a harbor of safety for conservative dividend investors. And while NOBL, the Dividend Aristocrat ETF, has beaten SPY during each month of this year, the fund is down nearly 12% during the first half of the year. Unless we see very strong returns during the last 2 trading days in June, NOBL will officially post its worst first half of the year return since the fund's inception in 2013. NOBL is made up of 64 individual Dividend Aristocrats, and 30 of them are beating the fund through month-end May, and 21 out of these 30 actually have positive returns year to date. So in theory, it's possible to beat NOBL's return if you can select better performing individual Dividend Aristocrats. Now I have to admit, this is not an easy thing to do, and often not the recommended investing path to take. Because of course you can also select the worst performing Dividend Aristocrats, and spend a whole bunch of time just to lose to NOBL in the end. If you feel compelled to select individual stocks, or Dividend Aristocrats for that matter, I would suggest that you pick a simple and easy to follow strategy. I personally came up with 3 simple strategies for selecting the best Dividend Aristocrats each month, and I have been testing how these strategies are working out with 3 buy and hold portfolios. The strategies are very simple and select the top 10 Dividend Aristocrats based on 1 or 2 metrics. And thus far, they have generated alpha over NOBL and SPY. Alpha is a measure of excess return over a benchmark. I started tracking these strategies in August of 2021, so with June almost over, I now have nearly 11 months of data. The 3 strategies are generating 6 to 12% of alpha over NOBL, and 12 to 18% of alpha over SPY. Let's briefly talk about each strategy, and then I'll share with you which Dividend Aristocrats are selected for the month of July. First up, we have the most undervalued strategy, and as the name suggests, the goal here is to find the 10 most undervalued Dividend Aristocrats. To determine valuation, I like to use dividend yield theory, that compares the current dividend yield to the historical trailing dividend yield. If the current dividend yield is higher than the trailing dividend yield, a stock is potentially undervalued. This theory assumes over long periods of time, dividend stocks revert back to long-term dividend yield averages. It works best with large and stable businesses that also have long histories of dividend growth, making the Dividend Aristocrats a perfect universe of stocks to apply this theory to. Let's have a look at how the strategy is performing thus far. Through June 28th, the portfolio is down 5.85%, which is pretty terrible. However, it is outperforming NOBL by 0.37% and SPY by 1.97% this month. May was a strong month for this strategy as it tacked on 3.11%, compared to only 0.31% for NOBL and 0.23% for SPY. The year-to-date returns through June 28th is minus 2.67%. which is 9.17% better than NOBL's return, and 16.93% better than SPY's return. If we look back to inception, which was August of 2021, the strategy has generated 12.2% of alpha over NOBL and 18.45% of alpha over SPY. Very strong results with almost a full year of tracking. However, I believe this strategy works better in a down market, since already undervalued aristocrats in theory may not fall as much as stocks that were fairly valued or overvalued. I think the benefits of this strategy are twofold. First off, you are buying shares in aristocrats that are potentially trading for attractive prices, which may minimize your downside and should offer alpha in the long run. While you may not see the results immediately, because sometimes it can take months or years for stocks to rebound to fair valuations, if you hold the positions for a long period of time, they should prove to be fruitful. The second benefit is a better than average starting dividend yield. This strategy always offers a better starting dividend yield as compared to NOBL's dividend yield, since we are targeting aristocrats trading for historically attractive dividend yields. Alright, let's see the 10 potentially most undervalued Dividend Aristocrats right now that I am selecting for July. We have Franklin Resources with a 4.7% dividend yield, Clorox with a 3.39% dividend yield, Ecolab with a 1.33% dividend yield, Lowe's with a 2.4% dividend yield, Medtronic with a 3.05% dividend yield, 3M with a 4.57% dividend yield, Stanley Black & Decker with a 2.94% dividend yield, T. Rowe Price Group with a 4.07% dividend yield, VF Corporation with a 4.34% dividend yield, and Walgreens with a 4.66% dividend yield. The average dividend yield for these 10 aristocrats is 3.55%. Based on dividend yield theory, they are at least 20% undervalued, with a handful being more than 30% undervalued. Okay, moving on to the second strategy, that is the fastest expected growth strategy. Here, instead of only focusing on the current valuation, I try to predict where all of the Dividend Aristocrats are headed over the next 5 years. The way this works is I compute a 5-year annualized return forecast, which is a combination of the current dividend yield, a return to fair valuation, and the forecasted long-term earnings growth with a margin of safety applied to it. I then select the 10 aristocrats with the highest return forecast for inclusion in the buy and hold portfolio. This strategy started off really hot, beating NOBL, SPY, and the 2 other strategies I am tracking. However, it is performing much worse than the most undervalued strategy this year, mainly due to the worst performance from more growth-oriented stocks. I still believe this strategy has merit and will remain competitive in the long run. Through June 28th, the portfolio is down 7.52%, which is 1.3% worse than NOBL, but 0.3% better than SPY. The portfolio also trailed both benchmarks in May, picking up a return of only 0.12%. However, year-to-date it is still 1.53% ahead of NOBL and 9.29% ahead of SPY, with a loss of 10.31%. Since inception, this portfolio is beating NOBL by 6.18% and SPY by 12.43%, which are very respectable levels of alpha. Once the market turns around, whenever that may be, this strategy should start catching up to the most undervalued strategy. Seeing how I've only tracked these portfolios for 11 months, it's unfair to call one a winner over the other. I'd say if there is a clear margin of outperformance after a 5-year period, then maybe I can call one strategy a favorite. Let's take a look at the selections for the fastest expected growth strategy for July. We have Albemarle with a 0.71% dividend yield, Caterpillar with a 2.56% dividend yield, Lowe's with a 2.4% dividend yield, Medtronic with a 3.05% dividend yield, Nucor with a 1.85% dividend yield, Stanley Black & Decker with a 2.94% dividend yield, Cisco with a 2.3% dividend yield, Target with a 2.99% dividend yield, T. Rowe Price Group with a 4.07% dividend yield, and VF Corporation with a 4.34% dividend yield. This averages out to a 2.72% dividend yield for all 10 selections this month, so it is quite a bit lower than the most undervalued strategy. But remember, here the aim is to maximize total return and not total dividend yield. All 10 chosen aristocrats have a return forecast of at least 19% per year over the next 5 years. This forecast is not meant to be interpreted literally, but I do believe these 10 aristocrats should offer better total returns than the remaining aristocrats over the next 5 years. And finally, we have the third strategy, which is called the blended strategy, since it's a blend of the first two. Here I look for the dividend aristocrats that are expected to grow the fastest, but only amongst the potentially undervalued ones. Thus far, this strategy is performing the best in June, with a loss of 5.21%. That is 1.01% better than NOBL, and 2.61% better than SPY. May was also a strong month for the blended portfolio, as it returned 1.82%, compared to just 0.31% for NOBL and 0.23% for SPY. Year-to-date, this portfolio is down 6.27%, placing it 5.57% ahead of NOBL and 13.33% ahead of SPY. Since inception, the generated alpha is a little bit better, at 8.42% ahead of NOBL and 14.66% ahead of SPY. So as you can see, all 3 strategies are performing very well compared to NOBL and SPY. The most undervalued strategy is doing the best thus far, but there's no guarantee it will continue to dominate in the long run. Let's take a look at the 10 chosen aristocrats for July in the blended portfolio. We have Caterpillar with a 2.56% dividend yield, Ecolab with a 1.33% dividend yield, Lowe's with a 2.4% dividend yield, Medtronic with a 3.05% dividend yield, 3M with a 4.57% dividend yield, Sherwin-Williams with a 1.07% dividend yield, Stanley Black & Decker with a 2.94% dividend yield, Target with a 2.99% dividend yield, T. Rowe Price Group with a 4.07% dividend yield, and VF Corporation with a 4.34% dividend yield. This averages out to a 2.93% dividend yield for all 10 chosen aristocrats. The forecasted returns are all above 15%, which is slightly lower than strategy number 2, but all of these aristocrats are potentially undervalued right now. There are no guarantees in the stock market, and there is no guarantee these strategies will continue to work. For now, they are doing very well, and I believe conceptually they all make sense. By focusing on a pool of quality dividend stocks and identifying the ones that are potentially undervalued and the ones that are poised to grow faster, I believe we can outperform NOBL in the long run. I'm going to continue tracking these strategies every month for as long as I can, to see if they will continue to deliver above average results. All the information I use to make the monthly selections is stored in a Google spreadsheet that is continuously being updated. I share this spreadsheet with my Patreon community, so they can see which aristocrats are undervalued on any given day. I hope you enjoyed the video. If you did, please give it a like and subscribe to the channel. Thank you for watching and see you next time.